Welcome back to Trade 360. I'm Diane King Hall. Time now for the big 3 stocks, 3 charts and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Scott Bauer, CEO of Prosper Trading Academy. It's great to see both of you. Scott, I'm curious to know your big picture take on the market action. I think given how we talked at the beginning of this week, I'm guessing you're probably not surprised to see a little bit of a pullback after the records yesterday.
No, not at all. And you know, the market is really getting kind of used to and maybe a little numb to the tariff news, because if we would have gotten this news that we got last night about Canada several weeks ago, I would think that the market would be down significantly more. So, you know, is it that complacency? Is it just, you know, the first time you hear something, there's a big reaction, and then more and more and more, you know, we kind of just slough things off a little bit? Seems like that's what's happening right now.
All right, let's talk about the first trade on your list. You've got Palo Alto Networks on your list. It's got a gain year to date, but underperformed the S&P 500. Tell us your views on where it goes from here.
Sure. So Palo Alto and all the cyber stocks are, you know, hit over the last couple of days. Palo Alto, Okta, ZS, you know, Crowd. You look at whatever it is, but I really like Palo Alto as, to me, they're the best in class. So the stock is below the 50-day moving average, but it is trending almost right to the 200-day moving average, which has been phenomenal support. So just based on that, I'm looking at a call spread, simple call spread here going out to August expiration, the 195-205 call spread, looking to pay $3 for it, and really just using that 200-day moving average as a big support line.
Okay. All right, Rick, take us through what you notice about this chart for Palo Alto.
Yes, a big breakdown for this one here. We can see that for starters, we had a notable ceiling near the 207 level, an old high point here. Really like 205 to 207 is where price had some trouble pushing to the upside. We did have a high close here, but we were not able to crack above it. High close was around 208 or so, a little bit above that level. Now, more recently, price has transitioned into a rising wedge type shape here, from which we got a downside breakout. Rising wedge, kind of contrary to the name, is typically regarded as being more of a bearish pattern here, where we're struggling to make higher highs, and the momentum is starting to slow. You can see that in the RSI here, our measure of momentum. You can see we saw bearish divergence here as the RSI compressed into this more triangular shape. Now our green trend line has been broken, and we are below the 50 midline that signifies the shift toward bearish momentum here. So I don't have the 200-day simple moving average here. The 63-day EMA is the one I happen to have here. We are breaking through that one now. We closed below it yesterday. It looked like perhaps we might make a run to the upside, but so far that's not really working out for the bulls in this stock. If we were to move a little bit lower, volume profile point of control, our thick red line, could be supportive near 187. We've also got our 63-day EMA in the thick of more volume here near about 193. And then in terms of, you know, beyond there, it's you know, the 205, 207 level. That's ultimately the mark to beat.
Okay, Scott, I'm going to send it back to you. I'm curious to know, given that you have an August expiration on this trade, what's the risk that you have to keep in mind, or that one has to keep in mind?
Well, the risk to the trade is what I paid for it. So it is $3. Obviously, we're going to go through that August 1st, at least right now, tariff announcement period. But again, it almost seems to me like the market is getting a little bit numb. I really think Palo Alto is oversold here, looking at that support. If we break down below that, maybe I adjust it, maybe I just exit out. But the risk I do have to the trade is what I paid for it, or $3.
Okay, let's talk about the next one on your list. You've got Autodesk on your list. It had a big hit this week. What's your view on this now?
Yeah, the stock, you know, really plunged on rumors that they might be buying out another company, PTC. And I love these opportunities when there's, you know, word on the street that something may happen, right? There's rumors on the street, and especially the opportunities like this one when a stock moves to a significant support or resistance area. And Autodesk did just drop below the 200-day moving average, but I am looking at this also as an overreaction, this news here. So I'm going to sell a put spread. And the reason I'm selling a put spread rather than buying call spread to the upside here is because unlike Palo Alto, in Autodesk, volatility, option volatility has actually spiked up a little bit. So I'm selling next week's 285, 280 put spread. It's a little bit in the money right now. I can probably collect a little bit better than 250 on this, which really reward to risk wise is really good. So if I did it at 250, my risk is 250. I really like the reward to risk on this one. And this is not necessarily looking for Autodesk to make a humongous bounce back here. What it really is looking for it to just kind of stay steady and grind a little bit higher over the next week.
Okay, looking for it to stay steady and grind a little bit higher. So then, Rick, what does the chart tell us?
Yes, the level Scott's describing around 280, 285 or so. If we were to look back at our chart here, that marked a notable low point from all the way back here in October. It was tested once again and held firm. Then we had the breakdown below that level. From there, we saw a bit of consolidation before a push to the upside. That's about where we are right now, 280, between 280 and 285. If you were to also look a little bit backward here, starting from the highs, you could draw a trend line connecting these lows. You can see the trend line was broken, but notice that this trend line, even though it was breached, was then supportive here. It happens to line up pretty closely with these lows that we're experiencing now. These old trend lines and old horizontal resistance and support lines, they can come back into play further down the road. We also have our 250 two-day exponential moving average, our purple line here just below 277.44. So there's several supportive factors coming together in this general area. But it was a pretty severe drop to the downside, very heavy volume that we saw, volume spikes. RSI, however, even though it has shifted over to the bearish side, we're not in the oversold area yet, though. That would be a further bearish signal in a trending market here. So perhaps the bulls can manage to stay out of crossing over that threshold here. To the upside, we have our volume profile point of control, our heavy trading area, centered around 295 or so. We've also got some other factors here, our linear regression line, our line of best fit, and our orange 63-day EMA, all coming together around that point, so that could be resistance going forward. And as I said, the 280 level stands out. Another volume node to the downside, heavy trading around the 270 level. That could be another area to keep in mind.
Okay, that's another area to keep in mind there. Let's talk about your final trade, Scott. You're looking at Datadog. It got some love last week, but it's been an underperformer year to date. What's your view on this now?
Yeah, absolutely. Last week there was the announcement they were, being included in the S&P 500. So we saw a huge spike up, which, full transparency here, we bought some put spreads on the spike up. We've sold out of those now. Now that the stock has retreated back, there was a big gap, and that gap comes in at 135. That's where the stock closed right before that announcement where it took off. So I'm looking for a gap fill here. If that stock does trade down, we need another couple dollars here or so. That could signal a reversal. So what I'm doing here is I am buying going out to August again. I am looking to buy the 140, 150 call spread. Pay $3 for that. That would be my risk to this. And this is all based on a reversal off that potential gap fill from last week.
Okay, so Rick, I'm curious to know the patterns then that you notice on the chart for Datadog.
As we said during our last chart here, these old horizontal lines can come back into focus here. And really, I had it at 136, but 135, 136, same general area here. You can see a repeated low point, high point, high point. And then after our big breakout to the upside, we've had a pretty common situation that occurs in trading where the bulls, have the big push to the upside. There's a bit of consolidation sideways to downward. In this case, base, forming kind of a bull flag, bull pennant type of action here. Then the retreat back to the supportive level comes, and then the hope is that the trend continues on above the initial highs here. So we're kind of at that critical point right now where you got to kind of make a decision about what to do. That's the level that really stands out in terms of the support and resistance setup here. We can also see, once again, very heavy volume during that move to the upside here. A lot of activity there. RSI has broken through its green trend line here, but we are still in the bullish side of the spectrum. So if we were to look at the volume profile study here, we can see heavy volume right around here, 145. That also matches up with this old gap from here. So that could be one area to watch for potential speed bump or consolidation. Volume picks up again near 155. To the downside, we start seeing heavy volume once again near about 132 or so. That would be about where we would break out from our channel type shape there. So that would be worth noting as well.
Okay, worth noting 132 to the downside, but I see your point about that 135, 136 level and seeing we're range bound right now. Kind of it feels like fighting at that 137 level. Scott, any final thoughts you want to leave us with?
No, exactly. I agree with Rick on that one with Datadog. And overall here, I think volatility is still too low, even though the VIX is up a little bit today on this news, just given the backdrop of the Fed, of rates, of tariffs. I think vol is too low. So instead of selling volatility, which I am doing in Autodesk because that vol popped, I'm looking at trades that I'm making to actually buy some volatility because, again, I think it's too low given the backdrop of everything we have going on.
Okay, potentially a frog boiling in water. Different viewpoints compared to some others that I've heard more bullish, but we'll see. We'll see. Volatility is a little higher, as you mentioned today, but definitely lower than what we've seen in recent months. All right, that's the CEO of Prosper Trading Academy, Scott Bauer, and our very own Rick Ducat, lead market technician here on Schwab Network. Thank you both.